It's now time for an in-depth look at the global markets, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Kiwoom Securities. Mr. Yu, thank you for coming on today.
Thank you for having me today.
Now, Mr. Yu, the Federal Reserve, as we heard, has kept interest rates steady for now, but it has left the door open to future cuts, leading to Wall Street inching up slightly. How did local and foreign markets fare?
Yes, as you said that if you look at yesterday's U.S. market trend, it was mixed until the FOMC minutes were released. Trump and Xi Jinping meeting on G20 summit, possibility that has increased the positive sentiment for U.S. market. But right before the FOMC meeting, market corrected to the negative territories. But with the news that the FOMC kept the interest rate hold, but indicated that it will lower the interest rate by around 50 basis points in the second half of 2019, has basically cheered the investors and actually resulted into U.S. market recovering. Dow showed 0.15% increase, S&P 500 rose 0.3%, NASDAQ was up 0.42%. With this news, the Chinese market has shown very significant run today. Yesterday, it rose by 0.9%. Today, another 2.2% plus. Also, the KOSPI shows some recovery. KOSPI rose 0.3%, while KOSDAK was up 1.3%. We have seen the Chinese renminbi appreciating. That resulted into quite significant rise of Chinese market. If the continuation of this rate cut possibility lingers, then the global equity market will go up on the basis of the liquidity injection in the market.
Right. Mr. Yu, what do you think are the reasons for the Fed's decision to freeze the rates now?
Well, I think that there are a couple of reasons. If you look at the first thing is that the U.S.-China trade war is definitely putting huge pressure on the global growth rate, including U.S. And the Powell have said that he admitted that this is putting quite huge pressure for U.S. economic growth rate. The second factor is the inflation number that seems to be quite timid. If you look at the inflation, it is coming in at only 1.8%. The core inflation is also coming in at 2%, and the PCE inflation is showing only 1.6% rise. And also the production price index, PPI, is rising only 1.8%. So all below 2% target. So as long as this kind of numbers are coming through, with the Fed expecting the global U.S. economic growth rate slowing down from the first quarter's 3.2%, there's no reason other than to lower the interest rate to boost the economy. So clearly, weaker economic growth rate expected going into the second half of this year is resulting into, and also lower inflation environment is resulting into Fed moving aggressively in terms of the rate cut.
Right. Earlier, Fed Chair Jerome Powell says many Fed officials believe that the case for easing monetary policy has strengthened amid the uncertainty over trade and slowing global growth. Is this a sign of a future rate cut? If so, when do you think it will come and by how much?
Yes. If you look at the Fed minutes, basically they're talking about the inflation pressures being muted. They're emphasizing that the economic outlook is going down to the 2% level from the first quarter of 3.2%. So clearly, they're talking about slowing of economic growth rates. Also, they're talking about the labor front, that it is weakening somewhat. If you look at wage increase, it is going down to 4% level from the 4.5% level. And if you look at the hourly wages, it is rising at only 3% level. So all that said, the lower growth rate of the wage increase is going to put pressures in terms of economic growth rate. So clearly, they're saying that there will be a lot more accommodative to the monetary policies in order to boost the economic growth rate. They're expecting the cuts by happening in the July 31st, which is the next FOMC meeting, by about 0.25%. But going into the further into the year, another rate cut is possible by another 0.25%. The maximum level of the rate cut is expected to be around 0.75% by end of this year, but that's probably unlikely. So we're expecting the July FOMC meeting resulting into one rate cut, and then sometime in October to December, they will be cutting another one. So that is pretty similar or slightly less than the rate cut that has occurred in 1998 that resulted into huge dot-com bubble phase. So I do expect that with the rate cuts happening, global equity market, particularly U.S. market, will show quite significant rise in the future.
All right, Mr. Yu, that's where we'll have to leave it today. Thank you, as always, for your insights today.
Thank you very much.